Hello and welcome to another daily recap. So today I'm going to recap day 93 and it's September 4, 2024. So today is Wednesday and I didn't take any trades in all the three pairs, EU, GU and XAU. But in EU and XAU, there were clearly no trades. But in GU, there was one clean setup, but I didn't take it because of it violated some of the fundamentals that I used to follow. But it was a very clean trade and there was so much of positive confluences than the negative confluences. My intuition told me to take the trade immediately, but I just followed the rules because uh, intuitive trading can be sometimes profitable and it will be more profitable when you are a successful trader. But as a beginner trader, as a novice trader, trading intuitively will lead to revenge trading and it will slow down my trading journey. So I was being very objective and I rejected the trade idea and it ended up playing very good. So don't miss the GU part. So let's start with EU. And today there was a news at 3 p.m. like yesterday. So I had to finish my trading by 2:45, 2:30 something like that because I can't manage my trade up to 3 p.m. So jumping into the daily chart of the euro dollar, the price has mitigated the daily demand order flow, but it can still come to this daily pivot demand. So there was an expectation that the price can come down, but also since the price is very consolidative, I can expect the price to, the bearish pressure has ended and the bullish pressure has started. So I can see it from that angle, and also from layman's perspective, I can expect if I didn't mark this demand, I can see that the trader can expect the price to come down to mitigate the pivot demand. So anyway, I just look into the medium time frame as well as my 4 hour time frame, another high time frame to give me a directional bias. So this is my 4 hour chart, and price has recently taken out the sell side liquidity below the 4 hour demand, and once it is taken, you can see the corrective price action. And yeah, swings. So first of all, let me introduce you to the 4 hour. The swing structure is bullish, internal is bearish. Price recently took the sell side liquidity and it is pushing up. So one more thing is that price is in the discount range of the the 4 hour swing structure. So that is one positive confluence for long. And one more positive confluence for long is that there is no POIs from which the price can react with, and there is a ton of buy side liquidity. So I can expect the price to take out this buy side liquidity and obviously take out the strong internal line. Trading against the internal structure is something that I recommend. But if you have ton of confluences, yeah, you can go against the internal structure. But for me, as a beginner trader, I'm not interested in trading against internal, expecting an order flow. I just trade with the order flow, even if I get a loss, I'll not be, I'll not get upset because uh, I'm trading with the order flow. If the order flow changes and I take the loss, I change my bias and again start to trade with the order flow. So it is the taking loss is actually part and parcel of the game. So currently price has swept the sell side liquidity and it is raging up. And with the ton of buy sell liquidity above, I can easily expect the price to push up and take out the strong internal line. So I can expect, not you know, I can only expect, but what I truly know is price can follow this order flow. Simple. But what I can expect, but what I must keep in mind, price can take out the strong internal line. So I'm not trading against the strong internal line. This is a zoomed in version just for if you're not able to see this, you can see this. Yeah, this is the H1. The swing structure is bullish, internal is bearish. So price hasn't reached the extreme demand. So there is a possibility that the price can come down. But remember, price is already in the deep discount. So anytime the price can push up because price is already in the demand order flow. And the 4R is also telling me that the price can go up. There is a ton of low resistance liquidity below, and price is actually chalk bearish during the pre-session analysis itself. So there is a possible chance that this chalk bearish could hold and all the low resistance liquidity could be taken out because there is no strong POI from which the price would react from. So what I can expect is either the price can make a fake break liquidation, mitigate this POI and then push down, or I can follow this order flow to target the weak internal line because there is no POI from which the price can react from. Simple, very simple. Yeah, at I was interested in this shorts, but at price actually made a bearish chalk and again it made a bullish chalk. So it means that it is a bullish sweep zone being formed. So now daily 4 hour and H1 is telling me to go longs. So that's why I was interested in longs for a certain amount of time. Like I was not, but inside my subconscious mind, I know that I was trading against the internal order flow. But since all the time frames are suggesting me to go longs, I just want to have a knack of the longs. So this is no, this is actually phase B longs, expecting the swing, I mean expecting the run phase. So all the criteria have been satisfied, and this POI is not the best of POI, but it still satisfies 4 out of 8 criteria. So that is enough for me to take trades. So only thing that I can trade is there is no M15 lead or there is no H1 lead. So I can just trade with using the M15 confirmation entry or with M15 LC2X models. So this is a good M15 POI. So if the price reacts from this M15 demand and then pushes up, so that would give me a ton of confidence that the order flow can continue and I can enter using M15 confirmation entry. So just a sec. So what are the risk factors? The price didn't take out the Asian low, and there is ton of sell side liquidity here, and the H1 POI just met the criteria. It didn't. It is not a very good looking POI from for a naked eye, but it still satisfies some technicals. But unfortunately, this chalk, okay, this is actually 8 a.m. candle. So at 9, when this 8 a.m. candle got finished printing at 8:59, this was not the most convincing chalk that I was expecting because it seemed like a liquidity sweep, and I was not interested in going longs from this short, I mean, from this POI. So I just waited for one more candle to finish printing, so to give me a body close above this candle, so which will give me a convincing story that the price is going to go up. So at 10, the price started to consolidate within this large 8 a.m. candle. So I definitely know that there is going to be no trades. But at just sorry, yeah. So I modified my analysis a little bit, and then when I looked at the price action, then I saw this is a low resistance liquidity. I agree, but if I see price has made a pullback and then pushed down, this pullback has swept liquidity and then made a market structure shift, which means this is a very good looking POI from which I can take shots and then look to target the weak internal low. So I missed this one during the 4 hour analysis, but now I got this. So at 11:14, again, since this is the POI that I was looking to take shots, so there is the price actually made a bullish chalk. So all I want to see is a bearish chalk, which means bearish sweep zone will be formed. So once a bearish sweep zone is formed, I can look to target these low resistance liquidity as well as target the weak internal low. So I was interested in longs for some time, but with the market price action, with the live market price action, I changed my bias to bearish because I missed some information in the 4 hour time frame. So when I got that information, I changed my bias to bearish. Now what? Now after I got my bearish bias, I didn't jump into the trade immediately. I waited for the New York to open for the price to drop bearish. Once the bearish order flow is confirmed, then I can look for shorts target the weak internal. And here you go. I got the bearish at 12:53. I got the bearish chalk. So I was expecting the body closure and not a wick because from 12 to 13, uh, this is actually 12 a.m. candle and this is 12:53, and even at that time 7 minutes to go for the candle to finish printing, the candle is still closed below the fractal low, which means the supply has stepped in. But yeah, but at 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 the start of the I mean at the end at around 13, this 12 a.m. candle, the 12 p.m. candle again just made a wick and it was not a convincing shift. So again I know that the prices from this point I know that the price is going to consolidate. I mean the price is consolidating, so I must be cautious of how I trade. So after which I was expecting the price made a strong bearish talk. It looks more of a sell side liquidity sweep. The 1 p.m. This is the 1 p.m. candle. The 1 p.m. candle shows some bearish momentum. Hopefully, price makes a strong bearish push that gives me a confidence to go for shorts, targeting the weak internal low. So all the bearish candles were kind of liquidity sweep. If I see a strong bearish push, then that would give me confidence that the institutions have stepped in to short the market. Then I can trade with the institution. But this 1 p.m. candle was just a liquidity sweep, and price started to go up. So this is 2 p.m. candle, I mean 2 to 3. So I definitely know the price is going to consolidate within this range. So 2 to 3, after 3 I'll not be trading. So that is my trading session. So I knew, okay, this is a mess of a session because there is chalks on both the sides, and price didn't actually make the real move it wanted to do. Maybe possibly because at 3 p.m. we are having a news and price wants to build liquidity on both the sides and target both the buy side and sell side liquidity, and that exactly happened at 3 p.m. You can see the price actually went up, taking out the strong internal high, and this week the bullish IBOS has been made and the PSA is started. So that is today. But yesterday, there is confusion between buyers and sellers. But at 3 p.m. news, everything got clear. So this is all about EU. So now you know why I didn't take any trades on EU. So let's jump into GU, which is more interesting, and I'll give you the devil's advocate. I'll give you the positive confluences and the negative confluences of GU, the trade in the GU. So you can decide whether this trade can be taken or not. So let's jump into GU. So let's start the analysis of GU. So this will be the most interesting trade that you will ever see in my daily recaps. So starting off from daily, the swing structure is bullish, internal is also bullish, the fractal structure is bearish, and the fractal structure is still bearish even after tapping into this demand. And one more thing is that this is a low probability demand. So and actually there is a failed reaction from this demand. So we can expect this fractal order flow can continue, and we can sweep this sell side liquidity below this daily demand. So the why to make a deeper internal pullback possibly. That was my expectation in daily. Here you can see price has reached 50% of the demand and still there is no strong reaction. This could indicate that the price can pass through this demand and to take out the sell side liquidity below. This is one reason. And second reason I gave you is that price made a failed reaction of this demand. So obviously this sell side liquidity can be taken out today. So jumping into the 4 hour, this demand getting invalidated is supported by further analysis, mainly by the 4 hour time frame. In the 4 hour, you can see that there is ton of sell side liquidity, mainly low resistance liquidity here. So there is nothing from the 4 hour to react from, and price can easily slide through all this low resistance liquidity, and then it can start to make a deeper internal pullback. So shorts are very high probability today. That's why I mentioned here. Yeah, and yeah, the swing structure is bullish, internal is bearish. So just was keen to follow the internal structure order flow with this low resistance liquidity to guide me. This is a zoomed in version. And yeah, and if I zoom in, and from the zoomed out version, I can't see any POIs here. But if I zoom in, I could see that there is an extreme 4-hour demand which swept liquidity and made a market structure shift. So this demand could hold and it can make the bullish IBOS. So this is one criteria for taking longs against the internal structure. But remember, this demand is not in the it is not in the premium the discount prices. It is in the premium prices. So if the same demand was present somewhere here, that I would have definitely taken the trade against the internal structure. But since like I thought of playing longs in EU because the price I was trading the PSP longs, and PSP was in discount prices for taking the longs. But here the price is not in the discount prices; it is still in the premium prices as per my market structure marking. And this demand can hold because it's replicate and change the market structure. It can hold, but the price is in the premium prices, and I would be trading against the internal order flow, strong internal order. So this is M1, sorry, H1. H1, the swing structure is bullish and the internal is bearish. So simple thing, I can just continue to look to trade in line with the H1 order flow. very simple. And yeah, one more thing is that in the 4 hour, you can see that there was a demand here, but this demand in H1 is just a low resistance liquidity. So the demand in the daily was a low resistance liquidity in 4 hour, and the demand in 4 hour was a low resistance liquidity in H1. So simply speaking, the demand is a low probability and it is out to fail. That is what my technicals clearly indicates. So there is nothing to react off, and there is high probability that the price can take out the strong swing low. Third point, price has now chalked bullish, creating high probability. Let me zoom in so that it will be easy for you. There is no zoomed in. This is zoomed in. Price has now chalked bullish, creating a high probability POI that swept liquidity and made a market structure shift and as an inducement. Thus, longs from this POI is very much high probability. Though, see, I'm looking to take longs with the weak internal structure. Remember why? Because I was expecting the 4 hour demand to hold, and I can look for longs till the price reaches this 4 hour supply. So if the price reaches the 4 hour supply, the story changes. The 4 hour supply can hold and the price can come down. So until then, there is nothing to the left. So I can scalp that small bullish momentum to the 4 hour supply, and then if I get its own shock or bearish in the 4 hour supply, then I can look for shorts. Simple idea. But yeah, this is actually a riskier trade because since there is low resistance liquidity, price can easily slide through. But since I'm having confirmations H1, since I'm trading with H1 order flow as well as I'm having M15 confirmations, so even if I get a loss, that would be kind of valid loss because I'm playing in line with the medium time frame order flow. So at 9, actually price chalked bearish and chalked bullish, so it is high probability POI because price swept the sell side liquidity and chalked bullish. So I can look to trade from this POI. So these are the phase P criterion in OT, medium time frame chalk, but the POI did not meet the 4 out of 8 criteria. It swept liquidity, did not have the displacement, made shift in the order flow, it is unmitigated, and it is formed within the kill zone. Apart from this, it is not stacked within the H4, it did not flip any order block, it is not a flip zone, and yeah, only 4 criteria was met. Just great. So it is a high probability condition, but the POI is not that much of high probability. So entry method is I can use M15 confirmation entry or I can use LC1 with M15 lead. So I feel that M15 confirmation entry is best for this idea as I feel this trade could be low probability, but technically it sounds good and I have high time frame narrative supporting my medium time frame bullish idea. What is a high time frame narrative? Price has mitigated the 4 hour demand which swept liquidity and changed the market structure. So high time frame, yeah, though there is a mixed signal, but one information that the market is giving me is that this demand could hold and the price can push up. So I have a partial high time frame support with me. The aggressive approach is to enter using M15 lead, and the conservative approach is to wait for the M15 to bounce bullish to take the confirmation entry. So I'll mostly go with the M15 lead because this take profit is very short. So I just want to get in and now, and I just don't want to wait for confirmations. And at 9:43, this is at 9:04, and at 9:30, price has tapped into the 4 hour supply. So the price didn't take out the M15 lead. So before taking the M15 lead, price has tapped into the 4 hour demand. So the bullish idea is now over, and now I switched my bias to bearish because price has reached the supply zone. So this is a very high probability supply because it has swept liquidity and and made an internal breakout structure on the downside. This is also a probability supply, 4 hour supply from which the price can make the next lower high. So I can't I'll not take the trade immediately. I need to wait for the H1 to chalk bearish, and then I'll take the trade from the freshly formed P1. So that is standard. I made that procedure as standard so that I don't get caught in the wrong side of the market expecting a price action. So at 10, so I could still look for longs expecting the London low to hold as it swept the Asian low. This is kind of Jura swing that ICD talks about, but I'm not interested in those kind of Jura swing because most of the time this could fail. I've tested it. It is having less than 30% of strike rate only. But this would be trading against the bearish internal order flow. Thus, I prefer for the price to take out the strong internal nice strong and trade the phase A longs and not rushing the process. Yeah, I'm talking about longs. For longs, I'll wait for the price to take out the strong internal high. So that would be phase A, and that would be high probability for me to take longs. And for shorts, in the phase C shorts, price to mitigate the 4-hour supply, I actually mitigated. H1 shock bearish, especially from POI, take the trade from there, and then target the strong internal, the sell side liquidity below the strong internal. Very simple. And yeah, I was, this is 4 hours supply, in the 4-hour supply, but within the 4-hour supply, price hasn't reached the H1 supply. So I can look to target the H1 supply with the long side here. And still there is high time frame support. This time I didn't mark it because, you know, price has reached the 4-hour supply. So 4-hour is against me. Yeah, 4-hour is against me. You can tell like that, but still you can argue that price is reacting off from the 4-hour demand. You can see you can either look the market from two angles. Either you can see it from the price moving from a liquidity pool to liquidity pool, or you can see it from the angle that the price moves from supply to demand, demand to supply. So in this case, I look it as the price moving from demand to supply, and then supply to the next demand. So probably this means that the higher time frame is not in my support, but phase B shorts are still valid because the price is in OT in line with the medium time frame order flow, and this POI has met 4 out of 8 criteria. Of this is has met actually 5 out of 8 criteria. But yeah, I'll show you in the next slide. Yeah, this is the entry. Yeah, in the M15, if you see, there is low resistance liquidity above. So these are the positive confluences for taking the trade. Price reacting off from the 4-hour demand zones being respected. And one more thing I want to show you is that you can see the demand chain is being respected. Price swept the sell side liquidity, pushed up. Again, price swept the sell side liquidity, equal lows, price swept the sell side liquidity and then pushed up. Again, price swept the sell side liquidity and then price pushed up. So which means the demand chain is being respected. So I can anticipate that this demand would also be respected and the price can push up. So it's just an anticipation. It may or may not play out. So yeah, demand zones being respected and liquidity above the news candle can also be taken. This is actually the news yesterday at 13 at 3 p.m. So there would be a ton of liquidity above this news candle which could also be taken. And London made the low of the day, so this low can hold and the price can push up. And strong liquidity sweep and the low resistance buy side liquidity and M15. So a ton of confluences. I'm adding confluences after confluences for taking longs because my intuition is telling me to go longs. That's why I add more of positive confluences. But what are the risk factors? I'm trading against the counter internal with the premium prices. Sorry, trading counter internal with price in the premium prices of the internal range. Yeah, actually, I could look for longs if the price was something here. Earlier longs was much more high probability because price hasn't reached the 4-hour supply. But now price has reached the 4-hour supply. So at any time, price could reverse and then can come down. So 4-hour internal equal to H1 internal and 4-hour is still in the premium prices. Yeah, the swing structure. This one I'm talking about the swing structure. The 4-hour is still in the premium prices. So we can have a deeper swing pullback in the 4-hour time frame. I cannot say the London has made the low of the day because if the New York takes the high, then probably that would be London has made the low of the day. But since the New York hasn't started, probably it has or it did not make the low of the day. So here you can see price, the London has made the high of the day, but it was instantly swept by New York at 3 p.m. news and then pushed down. So when there is a red folder news, that concept will not work. But without that red folder news, you can assume that you can use that concept for your analysis. So this is the judgment given by me. So let the New York session start and see whether the M15 demand is holding. If it holds, I'll take phase B longs with aggressive risk management and would break even or close the trade depending upon the LC size after the price takes the buy side liquidity over the Tuesday candlesticks. So I should have taken the trade, but no, I didn't take the trade actually. Actually, yeah, price actually tapped into the lid. So it is a valid LC1 as well as LC2P because it is at equal lows and all the equal lows were swept. And this is the liquidity candle. So if I place my buy stops here and stop loss just below, I can easily target the plus 2.6 hour above this liquidity candle. And yeah, price went in my direction and actually took the take profit. My take profit was just above the liquidity above the news candle, and yeah, actually price tapped into that my take profit, and it was a very good trade. Yeah, you can follow. So if I see back, I see this as my intuitive trading rather than objective trading because it is I just stick. So one more risk factor can also I can add to this. What that is the in EU, yeah, did not the the euro dollar did not make much of a bullish move, whereas in GU there was a strong bullish momentum. So this could be a kind of divergence, and the price can play down. So mostly these two pairs will move coherently. If they did not sync, that could be a trap. So from that angle also, I was worried whether this trade could go against me. But seeing the fundamentals, I just stick to the fundamentals, trading pro internal, and price to move from one supply to demand, demand to supply. So with those concepts in mind, I didn't take the trade, expecting the 4 hour supply to hold. But yeah, 4 hour supply didn't hold. Actually, price made a bullish I was with the news, and yeah, my take profit hit, and I got more than 10 hour in this trade. It's just a dummy trade. I didn't place the trade actually. Okay, guys. You can tell whether you will take the trade. You can take this trade or not. So it's up to you. So yeah, let's jump into XAU and see what happened in XAU and why I didn't get any trades on this day. Let's start with XAU. So in XAU, as I already mentioned in the start of the video, I didn't get any trades. So, but my analysis was correct and the price played out, but I didn't get any trades. If I start my analysis daily, so the swing structure is bullish, internal is actually bearish. So I was expecting the price to make a deeper internal pullback to mitigate this pivot daily demand. Yeah, I can expect the price to continue the bearish momentum, at least to mitigate the daily demand. But you must also keep in mind that there is a ton of buy side liquidity over here. And this is a low resistance liquidity being formed. Thus, price can anytime reverse and take the buy side liquidity. It doesn't mean that the price can tap into this demand and then reverse. It can reverse anytime. So, but my expectation is price to tap into this demand and using this pending orders, it can reverse and then take out all the buy side liquidity. So this is a weak as this low failed to take out the high. So this is the fractal structure that was actually bearish, and this low failed to take out this high, which means this low will be not taken out. This makes a short high probability. So there is a demand, there is a weak low, and there is a buy side liquidity which can be taken once the price mitigates this demand. So this makes the shorts very high probability. So jumping into the 4 hour time frame, the 4 hour swing structure is bullish, internal is bearish, and yeah, there is low resistance liquidity to the left. So which can aid the daily bearish bias, and I can also follow the small internal order flow till the price takes out the weak internal. This is in accordance with the daily bias. So Quora and daily are in sync with each other, and the price has pull back to the premium price, the small internal price, and this POI has swept liquidity and then made a market shift. So this is a very good POI from which I can look for shorts. But the thing here is price has already mitigated this POI. So that is the issue. I'll tell you why. So in H1, swing up there is bullish, internal is bearish, the small internal is also bearish. So one more leg, you can target both the small weak internal low and the weak internal low. So here you see the price has already mitigated the 4 hour supply and it has stock bearish. So all you want is the price to mitigate this supply and I can take shots from here. Very simple trade, very high probability, clean trade. So that was my expectation today. But yeah, but the thing here is this is not a very good POI. So ideally, there is a ton of buy side liquidity above. We expect the price to take out those buy side liquidity and then chop bearish. Then I can look trade from a freshly formed POI. Or if the price respects this POI, makes a push down, I can continue from that bearish momentum and then I can target the small weak. The very much aggressive approach is to immediately jump into the lower time frames and start looking for trades, which I don't do, especially at the start of the session. So at 10, the end of the London session, price just trickled down and took a small internal low, but it didn't take out the weak internal low, which I was a bit happy because price can pull back and then I can look to trade the one more pull bearish leg. At 11:40, price rallied up to taking out the small internal low. It didn't take out the small internal low, just liquidated it. The next obviously So as I already told you earlier in this video, price either moves from supply to demand, or you can see the market moving from liquidity pool to liquidity pool. Here it took the sell side liquidity. So the next obvious liquidity would be the buy side liquidity. So in this leg, the only buy side liquidity is Asian eyes. So it is very much obvious. If the price liquidates the Asian eyes, I can assume that the order flow has shifted bullish and you can look for longs from tomorrow. Personally, I'm not interested in taking shots directly from the supply with the price coming off with such a strong momentum seeking liquidity. I will wait for the price to chop bearish once it reaches not chop, I chop maybe because if this is chop and this would be the fractal look. So I can't look for chop, so I can look for I chop. Price chop bearish after mitigating the H1 POI or after shipping Asian eyes in chop bearish and I can look for shots. So until then there was no trades for me. And at 12:13, price did not actually mitigate, but I was expecting, kind of chalk, possibly to look for shots. The price was coming down. So if the price just pushed up and then pushed down, like, I could have taken shots, but only three candles I can trade. Totally six candles, three candles in London and three candles in New York. Swing trading is very simple. All you need to do is check your screen once in every 1 hour. That's it. So the idea didn't play out, and the price didn't actually tap into this POI. Price actually, my idea of taking a small internal played out, but I didn't get any trading opportunity because price didn't pull back to any POI. So I was not able to get in trades, and I sat in the sidelines for the entire day for XA. So guys, see you tomorrow. So to give you a summary, overall summary, in EU, GU and XAU there were no trades, and in GU I placed one dummy trade. So yeah, it was actually a good trade. I can't say it's a good trade. It's against my rules, but there are a ton of liquidity a ton of confluences that supported the trade idea. But nevertheless, I didn't took the trade because it was against my objectives. So I I generated my trade with no trades in object pairs. Thank you guys. See you on day 94. What date is that? September 5. Until then, cheers guys. Bye.